It's been a controversial play so far in 2026, but could this big tech name be the best play in the second half of the year? Joining us today is MarketBeat analyst Chris Markoch with a breakdown of where Microsoft is right now. Chris, I know you cover Microsoft regularly in our articles on MarketBeat, and this is a stock you've been following for a very long time now. We have lots of viewers who've been asking for an update on Microsoft, so this is that video. Let's get started with a look back at kind of the downfall of Microsoft over the last 6 months or so.
I don't necessarily agree with the idea that it's a downfall because I don't think the price action has had much to do with the fundamentals of the business. I think a lot of it has to do with price versus value. Even when Microsoft was up over $500 a share, it still was trading at a fairly attractive value to its historic averages. It was a little bit of a premium to the S&P 500, but you expect that with a company like Microsoft. But investors, I think, have decided they didn't want to pay that much for it. One of Microsoft's greatest strengths in the tech trade is the fact that it doesn't fit neatly into a specific category. People want to pigeonhole it as a hyperscaler, but it's not that. They want to pigeonhole it in the software names, but it's not that. You've had headwinds on it from the standpoint of, well, they're not going to meet their CapEx commitments. Then it was, well, they're spending too much on CapEx and it's going to eat into their free cash flow. Then it was, well, they're going to be affected by the SaaS apocalypse and they're going to lose this. And now they're saying the last earnings report showed that actually Copilot is gaining seats. So they've been affected by a lot of cross currents. And I think a lot of it's just that it doesn't fit neatly into a lot of buckets. That's what I actually happen to like about it.
And Chris, I know we have a lot to cover yet on Microsoft, but I want to say right here, I am choosing to add it to my Bridget's Buys watch list right now because I think it's an interesting time to be adding the dip on Microsoft and seeing how it continues to move over time. That is what my watch list is all about. It's at marketbeat.com/Bridget, or you can scan the QR code on your screen right now to check it out. If you haven't looked at it yet, it's a great way to see how some of the names that we talk about on this show move over time. I usually add one stock per video we talk about to this watch list, and I haven't added a lot of the Mag 7 to this list, so I'm excited to add Microsoft and see where this stock is at come December this year. And I know, Chris, you were going to make that case in this video today of why you think Microsoft is a good buy right now that will have a payoff for investors come year end. So let's get into it. You kind of touched on a few of the different areas I want to dive into with this company. I think the first one is just looking at the chart action because it's hard to talk about a stock without ignoring the fact that it's down 20% year to date, roughly 20% for the year. And this is one of those Mag 7 huge names. And for one of these big names to be underperforming at this level is definitely concerning for investors, especially those who own Microsoft, maybe who've owned it for a long time. Looking at the extended chart for Microsoft is another thing to talk about here too, because when you look at the gains over the last 5 years, this stock has only gained investors a return of about 40% when you look at just the stock price. And that's not really keeping up with how much the S&P and the overall market has gained in the last 5 years. So there's some underperformance to look at in the chart. There's also that new bottom that it hit just last week, which is essentially what looks to be one of the lowest points the stock has seen since about 2023. So there's a lot to cover. What do you have to say about all of the price action in the chart, Chris?
Throughout this entire 5 years, the 200-day moving average is still very much sloping up and gently to the right. The stock has found support at the 200-day moving average at every step along the way. There's some friction with that now, but it does look like that 200-day moving average is going to hold. The most telling thing is you're starting to see institutional money starting to flow back into Microsoft. And I think that's going to be one of the key drivers for the stock in the second half of this year.
All right, well, we're going to get into that and some of those fundamentals that you talked about. I just wanted to start with a look at the chart to say, we know Microsoft investors, if you've owned this stock, it has not been a top performer for you at all. And now we're going to talk about why that might turn around. So let's talk about the fundamentals, Chris. You mentioned a lot about some of the worries that investors had about, is Microsoft going to lose all of this business as part of that software story and fears of AI? So let's talk about what's actually showing up in their earnings right now.
On the headline side of it, there's really been nothing wrong with Microsoft's earnings. They're still growing revenue year over year. They're still growing earnings year over year. It's been the idea that investors are forward thinking. And so what they're concerned about is what is the future going to hold? And one of the big things affecting it is the CapEx number, which we'll talk about in a little bit. But yes, there was that concern earlier this year that you've got the models coming in from Anthropic and OpenAI, which of course has a relationship with Microsoft, but there was the concern that companies were going to say, we don't need to spend money on as many Copilot seats because why are we going to pay for that when we can use some of these other open source models? And I think that narrative is starting to break down with what we're hearing now, where a lot of companies are starting to realize that nothing's free and that this idea of you're paying tokens here, you're paying tokens there, and a lot of companies are starting to say, hey, wait a second, we don't want to be using the tokens as much as we're using it. But I think right in Microsoft's own earnings report, they showed that Copilot had over 20 million paid seats. Now, this was the first quarter that they had actually put a number to that. In the prior quarter, they had just said that Copilot was growing, and some analysts were putting that number of seats at around maybe 5 million. But now you're seeing Microsoft put a number to it. They said they had 20 million paid seats. That's a nice jump from where they were before. And I think it really just goes to show that's very sticky revenue for the company. I think even if people don't necessarily use Copilot, it's there. It's part of the whole, it's part of the whole Office suite. And it's something that shows Microsoft is successfully monetizing AI, although Copilot isn't the biggest story for that.
Yeah, I think there's several interesting pieces to break down in that answer, Chris. My first one that came to mind is talking about companies realizing how expensive these tokens are. So it's not a question of are businesses going to incorporate AI? Absolutely.
Yeah.
It's more of a fact of what is this business model going to look like and what is that AI worth? And really, it's worth what people are willing to pay for it. And I think that is what the market is starting to figure out with the AI story a little bit. And so Microsoft coming as a competitor with Copilot and offering maybe a different billing program, a different cost
Yeah.
structure is an interesting idea that could be beneficial for this company and could play a key role in this AI story. So I want to talk about that a little bit more. Do you think that Copilot has a chance to become an even bigger part of the business for Microsoft to help grow revenue? Or are there other areas that Microsoft is really growing in the AI story?
Well, I think Copilot does, and I don't think that's where the real growth is for them. The real growth for them is going to be on Azure. It's going to be in that cloud area and how that relates to AI. That's been the whole thrust behind their buildings, the building of the data centers and such. But I certainly do believe Copilot's going to play a role, but I'm not sure that I would hang my hat on the fact of saying that's the biggest story for Microsoft.
Okay, so Azure's the biggest AI piece for Microsoft, but let's talk about that forward outlook. As you mentioned, the market is very forward looking, and I think that's where investors want to see maybe more growth from Microsoft. Do you see a really good case for a strong forward earnings, strong growth outlook for this company?
Microsoft's in a race right now to say we're spending all this money to build out this data center infrastructure. And at the same time, we believe that there's going to be a payoff in how we're monetizing AI through Azure. If the CapEx spending is happening and they're not getting as much of a return on Azure as they want, that could impact earnings in the short term. But I think that's a short-term argument. I think the long term, definitely you're going to see Microsoft be able to not only monetize AI, but monetize it in a way that gives them the return on the investment investors are looking for.
Okay, so what I'm hearing is that the Bears do have some solid points to consider, and maybe there are some potential risks when you're looking at Microsoft as buying the dip right now to get some
Right.
gains later on this year. But let's talk about some of those catalysts that you have in mind as why you think that this stock has a really good chance of rebounding and getting some gains for investors who look at buying and adding Microsoft right now.
Microsoft has just sold off a lot. It's down about 20% in the last 12 months. I think it's down about 19% for the year. It was probably ahead of itself late last year. And so it's not necessarily to me that the Bears' argument is any better today than it was 6 months ago, but I think 6 months ago it landed with investors a lot better. And investors looked at it and said, well, yeah, we should take some profit. We should take some money off the table. And selling begets selling, and selling keeps going. And you can see that on the chart. I think you've got Microsoft at a point now where it's trading down at levels it hasn't been at since 2023. So I think investors are starting to look at that and say, okay, maybe the sell-off's been a little bit overdone. You look at where analysts' consensus price targets are for the stock, there's still a consensus price target of over $560, which is over 40% upside from where it is right now. That looks very attractive. Microsoft's trading it, as we're taping this, it's trading at around 23 times earnings. And I think that's 23 times forward earnings as well. That's a discount to the S&P 500, which is not common for a technology stock. It's also trading at a massive discount to itself. So you see a chart action that says Microsoft might be a buy. You're seeing a valuation story that says Microsoft might be a buy. And then you just have the other stories about this company, the growth in Azure, the growth in Copilot, and you're just starting to see all of those things that were perceived as weaknesses for Microsoft now are turning into strengths.
I know you have a new deal to talk about with Microsoft, so we're going to get to that too in just a minute. But first, let's talk a little bit about the software story. There's a lot of bears, not just on Microsoft, but on the software story, who are saying these companies aren't going to recover. AI is changing the game too much. Microsoft doesn't have enough of its revenue in that AI game yet that it's going to be impacted, and it's not going to get back to those levels. I've absolutely heard from people in the comments and in discussions who are saying something along those lines. And this software story is over, and AI is changing the game more than people think. Do you think that there is any truth to that take on Microsoft won't be recovering to the levels it's seen before because this AI story is changing too rapidly and it will impact parts of Microsoft's business?
I'm not trying to make the Microsoft is so bad it's good argument. I'm not trying to make the argument that Microsoft is cheap and now you buy it because it's cheap, because the bears would come back and say it's cheap for a reason. But the argument that seems to be in place with Microsoft that I've been hearing most often is you're spending all of this CapEx money, and some of that money is coming out of your free cash flow. Some of that money is going to be funded through new debt that Microsoft is taking on. So the argument is you're not going to be able to grow your way out of that debt, and you're not going to be able to grow that free cash flow back as rapidly as you will see the erosion on the earnings side of it. I get that argument, but I think the point that you're making, I haven't heard that as much. I mean, I've heard it sort of broadly for the software sector. I haven't heard it necessarily directed specifically at Microsoft as much as maybe companies like Palantir and others, is the software trade, and they're going to be affected by that. Again, I think that's where I would say Microsoft is more than just a software company now. And I think that's something that investors need to wrestle with. There were complaints about the Microsoft's position as a hyperscaler, but it's not just the hyperscaler. It's not just a software company. It used to be, gaming used to be one of the things that was carrying Microsoft a lot. And now gaming's hardly really a big part of their business at all. And in fact, it's going to probably become a lot less of their business. So my short answer is, I think Microsoft has a lot of roles to play in the game. And so I think that if you're looking narrowly at one part of it, you're missing the bigger picture with Microsoft.
Yeah, I think that's a great point, Chris, about companies shift and they move and they pivot
Yeah.
based on what's happening in the market. So sharing that gaming story and how they pivoted out of that into something different through the years is a great example of companies being nimble enough to adjust to the changes in the market and still be a successful company, just depending on what's happening. So I think that's a really great point and a good argument for the bull case on Microsoft. Let's add a little bit of that bull case in. Something about the gaming argument, that's a great case. Now let's get onto this new deal for Microsoft and what that means for their future, and especially in that AI story.
The agreement here, and some investors have probably already heard about it, it's about a week old news right now. So Microsoft secured a 20-year power agreement with Chevron to support a massive 2.67 gigawatt AI infrastructure project in Texas. The significance of this deal is it addresses one of the largest constraints facing AI growth, which is the access to reliable, large-scale power. Now, we've talked about data centers require, 24/7, connectivity, but we've also, the other side of that is they also require 24/7 power. That's something that Microsoft is now trying to get in front of in terms of securing themselves as a leader in this space.
Yeah, Microsoft has always been ahead of the curve in investing in energy. So it's one of the key things that tipped investors off to. There's going to be a lot of investment
Absolutely.
happening from these hyperscalers into the energy sector. Last year, the big headline with Microsoft was their investment into nuclear. Has there
Yes.
been any growth or movement on that side of the energy story for Microsoft?
I haven't heard of any new agreements that Microsoft's made on the nuclear front, but I also haven't heard, more importantly, I haven't heard them backing away from their commitments on nuclear. So nuclear is still an important story for Microsoft and they're still building it. But the nuclear story is coming. It's not here today, although you are seeing some small modular reactors coming online, which is again starting that story. That's going to be a key piece in the data center narrative. And I think that's only going to continue to grow. And Microsoft is playing a role there. Not only the data centers, but they're trying to secure the power that powers them.
I think with continued investments from companies like Microsoft and other these major hyperscalers, the nuclear story is far from over. It's still very much getting started. Those small modular reactors you talked about are a few of the stocks that have made this list of the best nuclear stocks to own in 2026. This is a special report on MarketBeat that's normally $30 or so, but it is free for our YouTube viewers right now. We have these special offers just for our viewers to try to add some value and some other stocks that you can follow on MarketBeat. So if you want to read that list, this is one by Thomas Hughes, and it is 7 of those nuclear stocks that he really believes in having success yet this year, and of course, on to 2027 as well. You can scan the QR code or click the link in the description to get that free report, again, just for our YouTube viewers today. All right, Chris, let's round out this Microsoft conversation with the biggest part of this story, which is your belief that it is going to be a really good buy for investors who are adding Microsoft right now at the start of July. Come Christmas time, what are your expectations for what Microsoft could do for investors?
This is where I look at analysts again, and I would say Microsoft's trading around $389 a share. The consensus target for Microsoft is around 560. That's about a 40% gain. Now, that's a 12-month target. I don't think it's unreasonable if you see the economy continuing to move like it's moving. I don't think it's unreasonable for investors to start seeing the stock be well over 420, 425 by the end of this year. And it might even go higher depending on, what happens with the macro economy, what happens with energy prices. That'll be a key thing to happen. I think that's another part of the Chevron deal that's interesting is Microsoft's choosing to use Chevron, which is linking them in with natural gas as a way to fund this project. Whereas you've seen Meta make a lot of contracts that are depending on these small modular reactors, which are real, not denying that. They're just not at scale yet. And then you see somebody like Amazon, they also have a nuclear uh, deal with Talon Energy, but that delivery is not going to be happening until 2032 at the earliest. With what Microsoft's got signed on with Chevron, they're going to be starting this power in 2028. Still 2 years away, but closer. And with something like natural gas that's here right now.
I think that's important for investors to keep in mind that the entire AI build out, this infrastructure story, this is a long-term story. We're talking about things 2 years down the road,
Right.
5 years down the road, even 10 years down the road. It's not a payoff in 6 months and that growth story is over. I think what the investments being made in 2026 might not be realized for a while for Microsoft. So that's another thing I want you to talk about, Chris, is what are your long-term outlooks for Microsoft of when an investment today and what that could look like, 3 years or even 5 years down the road. Again, going back to what we talked about at the start of the video, Microsoft's 5-year return at only 40% for investors
Correct.
isn't great. What do you think that next 5-year return could be for Microsoft?
You look at the 5-year return, not that great. You look at the 10-year return and you start saying, okay, that's total return of around 74%. And that same growth rate continues if you look at it 15 years, 20 years. I know some investors don't like to hear that because 10 years sounds like a lifetime away. But what I think you're looking at is where the story of Microsoft's going to be in 5 years. This AI infrastructure is a multi-year story. We're probably still going to be talking about it at some point in 2028, in 2030. Investors have to be able to look at this and filter out what is noise and what is actually happening. And I think Microsoft's been telling the story in their earnings reports. It's not 100% without risk, but I think you're looking at a company that still has a lot of cash. Even with the cash that they're putting into their own to build out their data centers, they've still got a lot of cash. This isn't a company that's in danger of running out of cash. That means they've got the ability to be a part of this story in a major way. The payoff may not come immediately this calendar year, but I think in 3 to 5 years, people are going to look back and say, that was a name that was a no-brainer to buy when it was on this big dip.
All right, Chris. Well, thank you so much for diving into Microsoft today. I'd love to hear from viewers in the comments. Do you think of Microsoft is still a buy where it's at right now? Did you get in on the very big low that it was at just last week? Are you still adding some right now? Or have you given up on Microsoft altogether? I'd love to hear from everyone in the comments. And if you want to hear a completely different take on where this AI story is going, make sure to watch this interview. It is one of the most contrarian interviews we've had on this channel before, and it's always good to hear different viewpoints. You can watch that full video here with a 50-year investing veteran. It's an interesting conversation. Don't miss the video.